Hi, IBD. I'm Meredith Heyman. This is IBD Explains. Thanks so much for joining me. The rate of inflation is continuing to moderate, and so, as was expected, the September Fed meeting wrapped with long-awaited interest rate cuts, the first in more than 4 years. Joining me to break it all down is IBD news editor and economy expert Ed Carson. Ed, we got a lot to talk about.
Yes, we do.
Absolutely. Now, the Fed announced its first rate cut at this meeting, the first since the pandemic began in March 2020. How low did they go?
They cut by 50 basis points. So that was, the markets were leaning that way, but they wasn't really sure. So did that. And also the Fed indicated that they would cut a little bit more later this year and also further through 2025.
Absolutely. And what were the big takeaways from the news conference with Fed Chair Jerome Powell? And what was the big announcements that were made?
Fed Chief Powell seemed to be saying, like, look, the economy still seems to be headed towards a soft landing, that things are still and actually said that, well, we're not behind the curve. We're just trying to make sure that we can support the labor market. Actually said that if they had known what the July jobs report was back at the end of July when they met, they might have cut then. So they definitely are focusing on jobs versus inflation. But Powell seemed confident that he can navigate an economy through a difficult strait. A soft landing is not easy to engineer, but he seems fairly confident right now.
And how did economic data, especially related to inflation and the labor market, affect this rate cut decision?
It definitely was the labor market. He cited specifically a lot of these downside revisions, not just in July, but also in the August report. There was a lot of downside revisions to prior months, and that's sort of okay. We're now starting to worry about, the economy. And meanwhile, on the other side, inflation has been coming down. It hasn't come down as quickly as sometimes people have wanted, but it has been coming down, and there's indications it'll keep falling. So the Fed is like, well, now our focus is the other way. We're not really focusing on inflation. We're going to focus on making sure the economy stays afloat.
And how much more is the central bank expected to cut interest rates over the next and last two Fed meetings in 2024?
Right now, they're penciling in another 50 basis points total for the next two meetings, and then another 100 basis points in 2025. Now, those projections can change a lot, and Powell said the same. And so it could go more or less depending on how the economy and inflation run. But that's not too much of a surprise. That's probably what people were expecting the Fed to say.
And what are the implications for investors following this rate cut?
In the backdrop, all things being equal, lower rates, it should boost the economy. It makes the economy, housing less expensive. Anybody who wants to borrow, less expensive. So it should increase growth. It should be good for the stock market. I mean, we trade off of you have a choice between stocks and bonds, and this makes the bond yields go down. So relatively, this makes stocks more attractive. It makes growth stocks in particular look more attractive because they are, because people discount future earnings, and if the interest rate's lower, then those future earnings look more attractive.
And how should investors react to any possible market volatility following this announcement?
And there has been volatility. I mean, and there may be volatility through Thursday, maybe even Friday, because there's a lot of news to digest with a lot of these things, the projections, the Powell comments, beyond things. So there are opportunities out there, but if you take opportunities, just be very careful. You don't want to get too excited. I mean, the S&P jumped 1% almost immediately after the Fed came in. A few minutes later, it was negative. It's swinging around. We still don't know where it's going to close today, let alone the next few days. But overall, the market is acting well. The leading stocks are acting well. The S&P is right around record highs. The Dow's at record highs. The NASDAQ is improving. So the broader trends are positive for investors. And if that continues, then they can continue to act that way.
And Ed, finally, what industry groups and sectors are being impacted the most in reaction to the rate cut announcement?
There was things going back and forth, and that's an issue. It's hard to say because there was things moving up and coming back down. So it seems like some real volatile, strong growth names like Tesla was flirting with a buy point, backed off. Some home builders, which benefit from lower rates, some of those were moving up, backing off. That they were generally still positive. It was pretty broad-based gains today, and so you could see those home builders, see the growth stocks, but it felt like there was a lot of gains. It's just very volatile, as market swings back and forth.
Absolutely. All right, Ed, we'll be watching. Thanks so much for joining me. This is IBD Explains. I'm Meredith Heyman. Thanks for watching IBD. We'll see you next time.